The RBA warns of higher inflation. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee because I thought we'd have a look at this article from Yahoo Finance, which is telling us the RBA is warning about higher inflation ahead, but the RBA haven't increased the cash rate because everything's good. Anyway, let's have a look at this. Well, the fall in petrol prices appears to have tamed concerns over the inflation outlook, but the Reserve Bank of Australia is yet to be convinced that price pressures have cooled. While the RBA left the cash rate at a record low of 0.1% following Tuesday's monthly board meeting, the word patient was notably missing from Governor Philip Lowe's statement in terms of the interest rate outlook. Now here's the thing to consider. We've instantly had petrol drop because that's a huge tax that the government has removed, guys. You know, that's essentially what it is. Here, let's jump over. So let's get the tablet here and talk about petrol. Some rough figures of where the costs are associated with it. So let's say this is our petrol cost, and there's about three portions to it, guys, that we want to think about. The one down the bottom here, about 40%, is international costs and refining costs. Then you've got another 40% here, which is taxes. And then here you've got wholesale and retail, which is 20% at the top. So you got to remember, guys, this... Oh, hang on, that's too big. There we go. Let's go a nice orange here. But this guy here, that big slither is these taxes that we're paying. It's actually a bit more than 40%. I'm looking at some numbers, but roughly 40% are going in taxes. So fortunately, the government took a big chunk of this, at least for 6 months, out. And then all of a sudden, our petrol is reduced by this chunk. So it moves down, guys. So we've got a nice big saving here of our petrol costs because they got rid of the tax. It's the tax that's the cost. Now, you've got all of these people looking at trying to increase wages, trying to address housing affordability. We need to look at the tax burden that is placed on us in all these different things. There's so many hidden taxes that people don't realize. Think about it. They can cut the fuel excise by a huge chunk, 50%, and it makes an instant difference to so many people who are shopping, who are buying food. What about if we look at that approach, making it permanent, and if we look at applying it to different parts of the economy? And okay, then we may have to reduce the government services that we get. How many services would you be willing to give up if you didn't have to pay less tax? This is the issue we have with our democratic system at the moment, where you vote for representatives. You have people who will vote for more forced redistribution of wealth. People who will get more gimmies, more free stuff, and you can't blame them. You can't blame people looking out for themselves. But the problem is that's going to damage the greater civilization, the greater nation that we have over the long term. But people don't see it. So let's get back to this. He noted the annual inflation rate is already running at 3.5%, and the more policy-sensitive underlying measure is at 2.6%, compared to the RBA's 2 to 3% target. Higher prices for petrol and other commodities will result in a further lift in inflation over coming quarters, Dr. Lowe said. Noting important inflation and wage growth figures are due in coming months. They haven't done anything and they're waiting for it. They're hoping for inflation. They want it. They haven't been in their range for forever. The board will assess this and other incoming information as it sets policy to support full employment in Australia and inflation outcomes consistent with the target. I mean, here's the thing, everyone. All these people thinking we're in a free market. I mean, you've got a board setting interest rates. KPMG chief economist Brian Rise says an interest rate rise could come as soon as July. But when the rate rise does come, future rate increases could happen quite quickly afterwards to catch up for the long period of ultra-low rates. Such warnings come as Prime Minister Scott Morrison attempted to take credit for a drop in petrol prices after last week's budget temporary cut fuel excise. But economists say it's more to do with a fall in global oil prices. Is it really? Let's have a look right now at what global oil prices are. Trading economics. We'll jump over here. There we go. Good, that screen's up. Commodity prices. Oil. Gasoline is up. Brent is 105 and crude is 100. So yeah, no, it's dropped. We're off the peak. So does that mean we're going to get an additional saving to our petrol? Wouldn't that be great? So we'll have to keep an eye on it, guys. So what they're saying is over here, their argument is that only this portion here will go here. This portion here, the international charges, they're saying that's where the saving has come from. So we've managed to cut a slice off that to reduce our fuel costs. So hopefully we'll get that down and we'll get this nice juicy tax saving here that we're cutting out, guys. You know, maybe we need to get in a habit of reducing taxes to increase the quality of life of citizens. You know, that's the issue. So Mr. Morrison will soon announce the election date. Mr. Morrison, who will soon announce the election date, chose a petrol station in Sydney, displaying unleaded petrol at 1.66 cents a litre, or $1.66, to spruik his government's economic credentials. I mean, here's the thing, everyone. The economy is an emergent system, and we try and manipulate it with a few little levers, and the government just gets in there and picks winners and losers. And I would argue that it's impossible to control an emergent system because it's more complicated than all the levers and ways you can measure it. So anyone saying anyone is a better economic manager than another is a bit of a joke. You know, it's just all you'd want is a government that gets out of the way more and more of your life. That's what the push should be, but that's not the rhetoric here in Australia. Prices will still move around, but what I do know is that there will be 22 cents less a litre than they were otherwise. The halving of fuel excise was part of an $8.6 billion cost of living support package announced in the budget and came after petrol prices spiked above $2 a litre as global oil prices rose due to the war in the Ukraine. Well, the question is, why is this only temporary? It should be permanent. If we can permanently reduce the cost of living burden on Australians, shouldn't that be a priority of the government? Shouldn't that be what everyone is advocating for? This will impact the poorest the most. Labor has no intention of extending the cut in fuel excise beyond the legislated 6 months. And wait and see, Labor they're gonna impact our cost of living significantly when they get in. If there is an incredibly compelling reason to leave it in, we would consider it, Shadow Treasurer Jim Chalmers told the National Press Club. But to be upfront with Australians, no matter who wins government in May, it's likely that the petrol price relief will end. Dr. Lowe made no mention of the budget in his statement. The ANZ Roy Morgan Weekly Consumer Confidence Index, pointed to future household spending, rose 2.5% after several weeks of decline. Consumer inflation expectations also tumbled 0.6 percentage points to 5.8% after setting a 10-year high last week. The fall in petrol prices is likely due to lagged effects of the drop in crude prices since March 8, which have declined by nearly 20% since then, ANZ Head of Australian Economics David Plank said. We think this explains much of the lift in sentiment, though the focus on relieving cost of living pressures in the federal budget may also have played a part. Meanwhile, Australia's construction sector continues to grow, despite rising price pressures and difficulty in attracting and retaining skilled workers. The HIA Performance of Construction Index rose by a further 3.1 points in March to 56.5, building on the recovery from a sharp fall during the summer holiday period. So let's have a bit of a talk about this one, guys. So there we go. So we have the RBA warning about inflation increasing, although they want inflation. We've got the Prime Minister trying to claim credit for petrol cost of living improvements and petrol deductions, where economists are arguing it's due to global oil pressures. The takeaway from all of this should be, if the government can reduce the burden they put on their citizens, they should. That will reduce the cost of living implications we have. It will give people greater financial independence and freedom, make it cheaper for those on welfare to get off welfare because it'll be cheaper to get to work. And that's just petrol. How can we get the masses understanding that? You tell me in the comments, guys, because it's getting frustrating. Anyway, thanks for watching. Like, share, subscribe to the channel if you're a fan and enjoy the content I find and put together here. There are a few ways you can help out. You can join us on YouTube or Patreon. Sign up for SelfWealth or Stake, or use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. Take care, everyone. Have a great day, and I'll see you in the next episode of HeiseSays. And I'm not getting used to $2 petrol. I want to be one of old boomers and complain. I remember when it was 40 cents. Back when we still had 8-character file name limits and computers. Showing my age.